welcome to PBA at noon, zooms in on silver. I'm Paul Benwell and I'm joined by my colleague Sophie Caesar. Silver has been front and center these days with growing demand and the hashtag silver squeeze movement. So today we thought we would take the first 5 minutes of our webinar to introduce you to Peter Krauth, a former portfolio advisor and a 20-year veteran of the resource market and with special expertise in precious metals, mining, and energy stocks. He is editor of 2 newsletters geared at helping investors profit from metal market opportunities: Silver Stock Investor, which is silverstockinvestor.com, and Gold Resource Investor, goldresourceinvestor.com. Peter will share with us the outlook for silver in 2021. And following Peter's presentation, we will move right into American Pacific's presentation. Please feel free to ask your questions to Peter and Warwick in the Q&A during the webinar, and we'll ask them following the presentation. Thank you, Peter. I'll have some questions for you later. So you want to go ahead?
All right. Thanks for that, Paul. Let me go ahead and start with the presentation. So my presentation for you today is the case for investing in silver and silver stocks. Let's start with supply. If we look at what's happened in supply over the last few years, we can see silver has been very much challenged. Silver supply has been dropping, in fact, every year for the last 5 years. If we look at what has happened, in fact, all of the largest, sort of the 10 largest silver producing countries, none of them has escaped that. Every single one of them has seen mine supply drop. So supply is certainly challenged. In terms of where silver comes from, well, just 30% of silver comes from primary silver mines. 70% is produced as a byproduct of mines that produce gold, lead, zinc, and copper typically. So the interesting dilemma here is that the silver supply is inelastic. If silver prices rise, the producers tend to have little incentive to produce more, or even the ability to produce more. Certainly in many of those cases, like I mentioned, 70% of it is a byproduct. So the revenue stream of silver is so low that those producers tend to not even react to higher silver prices. So low supply, growing demand tends to lead to even higher prices. So silver is both an industrial and a monetary metal. Like gold, it's monetary, but it has this other side that's industrial, with 50% of industrial silver demand coming from solar and mostly solar and electric vehicles. And the wild card lately has certainly been from the investment side. Typically, it's been 20% sort of in the last few years, but we've seen that jumping dramatically recently, and I'll actually touch on that a little bit later. In terms of the industrial demand side, vehicle demand has been soaring. Internal combustion engines have represented about 15 to 28 grams of consumption of silver per vehicle. And now with the rise of electric vehicles that require more like 25 to 50 grams, that's actually double the consumption of the internal combustion engine vehicles. And so that's leading to the Silver Institute, for example, forecasting that more recent 60 million ounce demand on the vehicle side for silver is actually going to grow by about 50% over the next 5 years to 90 million ounces for vehicle silver demand. Photovoltaic is solar panels. We've certainly seen lots of strong growth. We expect that to continue to grow dramatically over the next several years. And it's true that solar panel consumption of silver has been falling on a per unit basis. That's because of growing efficiencies in silver requirements per panel. But we feel that the green energy push is going to lead to dramatically more silver panel installations. And as a result, that will compensate for the lower consumption per panel. As I mentioned earlier, silver investment demand has been exploding. We've seen it increase steadily since 2015. to the point where now silver ETFs hold over 1 billion ounces of silver, which is in fact an entire year's of silver supply. In 2019, the the silver investment side of things has grown by about 12%. In 2020, it grew 16% over 2019. And the Silver Institute expects that it will grow this year by another 18 to 19% over last year. So certainly silver investment has been certainly an area to watch very closely. The outlook for silver for this year, well, we certainly know that physical silver and gold continue to be sold out at bullion dealers. What's available has very long deliveries. Premiums are up to 50%, which is more than 3 times normal. The physical silver price has completely detached as a result from the spot and future prices. And we believe that that's going to be resolved with silver prices climbing to approach closer to what physical silver prices are. And our target for this year is $37 per ounce silver spot price. So if we look at what ways to gauge the silver price, one traditional way is the gold-silver ratio, which is how we measure how many silver ounces are required to buy an ounce of gold. It actually peaked at an historical all-time high in March of last year at 125. It's fallen dramatically to about 65. We feel it's heading closer to about 55, which is more of a long-term average. And if we were to use $2,000 gold to estimate with the ratio at 55, that would imply $37 silver. And so we're looking at easily about a 30 or more % gain in silver prices from here. Interestingly, silver always outperforms gold in a bull market. We saw that in the 1970s market. This chart is actually a percentage chart and not necessarily a dollar chart, but if you see the spread. So in the 80s, we can see all the way on the left, silver peaked. Its percentage gains were much higher than gold's. In the 2011 peak, that was the case again. And today there's a considerable spread where gold has reached an all-time high, new all-time high in August of over $2,000, and silver is still at about 50% of its own all-time high. This is a bit of an exceptional case, but in 2016, silver stocks actually provided 5 times leverage over the silver price in a period of about 6 months from January to July, August or so, where the silver price was up about 48% and silver stocks as measured by the SIL silver ETF were up 240%. So that's just to demonstrate just how much leverage silver stocks can provide over the silver price. Since March, so this is a bit more of a recent gauge, silver stocks are up about 117%, gold stocks are up in a little over 50%. And so we can see that since June, July, August, silver and silver stocks have started to clearly outperform gold versus silver, and we certainly expect that behavior to continue going forward. What have previous silver bull markets generated? Well, the 1970s market provided a 36 times return, and this is just in the price of silver. The 2001 to 2011 bull market provided a 1,000% return in the price of silver. So as you can imagine, silver stocks with their leverage over silver provide a multiple, can and often provide a multiple of these kinds of returns. So to recap, or to give you a quick overview, I write 2 investment newsletters, one focused on gold and other resources, and one focused exclusively on silver. It covers the full risk spectrum of silver, from silver ETFs all the way to junior silver explorers. It's aimed at new and experienced investors, and it covers everything from low to higher risk stocks. And so I encourage everyone to check out these 2 newsletters, and to remember that gold's in a bull market and silver certainly in a bull market, and it's time to have some in your portfolio, whether it's physical silver or silver stocks. I certainly believe everyone deserves and needs to have exposure.
Thank you, Peter. Very interesting.
Pleasure.
And I'm going to save some questions for you for later. Anybody out there that has a question for Peter, please go into the Q&A and you can ask him, and we'll ask them at the end. So now joining us, we have the CEO, Warwick Smith, and CFO, Eric Sanderholm from American Pacific Mining Corp. It trades on the CSE under the symbol USGD. And is a gold and silver exploration company focused on precious metal opportunities in the Western United States. The company's flagship asset, the Madison Copper-Gold Project near Silver Star, Montana, is a joint venture partnership with Kennecott Exploration, a division of Rio Tinto. Rio Tinto must spend $30 million US to earn 70% of the Madison Project, which has already returned high-grade drill results from the 2020 exploration program. Also within the company's portfolio are two high-potential, high-grade gold and silver exploration projects located in prime districts of world-renowned Nevada, both under joint venture earning agreements, each with robust drilling programs planned for 2021. Thank you, Warwick, for joining us today. So you can start your presentation anytime you wish, and we will have some questions for you later.
Thank you, Paul. I appreciate it. And thank you for the time as well, Peter. Appreciate that as well. I'm going to share my screen with you guys here. There we go. American Pacific Mining. We completed a transformative transaction in June of last year, picking up the Madison mine down in Montana. It's under joint venture with Rio Tinto. Rio Tinto may spend up to $30 million US to earn up to 70% of the project. High-grade gold and copper skarn at surface with a porphyry underneath, being as this is a bit of a silver flavor today. I will touch on that and how that reflects in Madison. But we also have two other assets, one by the name of Gooseberry, which is a past-producing silver gold mine just outside of Reno, and then a past-producing gold asset just outside of Elko, Nevada, called Tuscarora. Those are both presently under joint venture as well. I am partnered with Eric Sanderholm, who's going to join for the Q&A. He was the former head of exploration in the Western US for Newmont. Company has 65 million shares out. We have $1.5 million in cash. We have $2 million in securities, and we burn about $100,000 a month. But don't let that low burn rate fool you. We'll have somewhere in and around $10 million worth of drilling done this year, all funded by our partners. This is a bit about the Madison Copper-Gold Project. So again, partnered with Rio Tinto. Past production on this asset was from 2008 to 2012. 2.7 million pounds of copper with grades ranging between 20 and 35% copper. So incredibly high grade. And then 7,570 ounces of gold at 16.1 grams per ton gold. Now, as you can imagine, Rio Tinto being the second largest mining company in the world, they're not there to look for something small. They're there looking for a large mine. The analogy that we use is the Butte mine, which is about 48 kilometers from us. It's produced 21 billion pounds of copper, 715 million ounces of silver, and 3 million ounces of gold. So there's that silver component that I mentioned. That's certainly the ultimate prize, is to get into the porphyry, but the skarnet surface has given us a great deal to be excited about, and it's given Rio Tinto a great deal to be excited about as well. Here's the location. You can see the big star there. It's just above Silver Star, Montana. If you were going to Montana for a holiday, you would not be going to Silver Star. It is very much a mining town. Butte, which you see to the north of the screen, is the airport that you fly into. It's about an hour away from Madison. So here's some historical drill highlights. One thing that we've really done with all these assets is we focused on high-grade assets in the Western US. So when I refer to high grades, here's some examples. These have been drilled previously at the Madison mine. 30 meters of 25 grams per ton gold, 11 meters of 41 grams per ton gold, 4.6 meters of 82 grams per ton gold, 7 meters of 25, and 14 meters of 12. And then great copper numbers, 61 meters of almost 7% copper, 8.5 meters of 40% copper, 84 meters of 1.89% copper, 2.7 meters of 41 grams per ton gold, and almost 20% copper. So just great cracker grades. Here are the terms of the joint venture with Rio. Again, they can earn up to 70% of the project by spending up to $30 million US. The focus here for us is, and the point that we want to get across is, owning 30% of a Rio Tinto size target can be a tremendous win for American Pacific shareholders. Presently, the company's got about a $12 million market cap. You guys are seeing this at a great time, being as that a financing has come free trading, and then shares came free trading from the acquisition of the asset. So that's taken the stock price down a bit. With all of that being free trading now, and the stock being at about a $12 million market cap, and with about $10 million worth of drilling happening this year, we think it's a good time to get out and be telling the story. I am going to take 3 minutes to show you guys a video that shows you the 3D model, so you get a feel for what this looks like in a 3D space. So you'll stop hearing my voice and hear a female voice for 3 minutes, and then I'll come back and take you guys through the rest of the presentation.
American Pacific Mining Corporation presents the Madison Copper-Gold Project in the U.S. It's located 1.7 miles west of Highway 41 in Madison County, Montana, and the project covers an area totaling 2,514 acres. It's situated along the south flank of the Radar Creek Pluton, which is a tertiary Cretaceous-aged intrusive rock. A total of 163 drill holes have been completed at the project, totaling 77,420 feet of surface and underground drilling. The drilling area includes 3,000 feet of underground workings to a depth of 215 feet. 2019 drilling by Rio Tinto is highlighted in red, showing copper grades greater than 1%. Green and red 3D interpretations of high-grade copper and gold zones are shown, respectively. The first cross-section here highlights the location of drill hole MADN 0013, encountering gold and copper mineralization 112 meters down plunge of the 3D modeled mineralization. The interval is found in skarn-related sulfides, which are chemically controlled and therefore can have broad lateral and depth extent as long as the metal-bearing solutions and receptive host rocks are present. Now we take a look at a cross-section highlighting the location of drill hole MADN 0011, which intersected gold and copper mineralization 43 meters down dip of the current 3D mineralization model. This intercept is hosted in skarn-style alteration and also contains anomalous silver values. Before moving on to the next cross-section, we present the gold assays in the drill core, showing grades greater than 15 grams per ton. We continue on to a cross-section highlighting the location of drill hole MADN 0010, which encountered copper and gold mineralization 108 meters lateral to known mineralization. Based on the geometry, this intersection could represent either a lateral extension of modeled sulfide mineralization or a separate body of skarn mineralization that has no surface expression. Now we move in to show the underground workings and highlighting underground drill holes UG1705 and UG1706, both drilled in 2017, intersecting gold mineralization between the historic Broadway mine workings and the more recent workings. The historic Broadway mine produced 144,000 ounces of gold, averaging 9 grams per ton. Drill hole C0506 in 2005 also encountered skarn-related gold and copper mineralization. Stepping back out to the drilling area, drill hole 866 is highlighted as an early-stage hole drilled in 1986, which helped establish this skarn mineral system as having a substantial gold-rich component within its mineralization history. Moving around to a final view highlighting drill hole C0608, which intersected significant copper and gold grades as well, further presenting the significant opportunities for near-mine exploration and development work for American Pacific Mining at the Madison Project. From 2008 to 2012, the Madison mine sold over 2.6 million pounds of copper with grades ranging from 20 to 35%, in addition to 7,570 ounces of gold at an average grade of 16.1 grams per ton. These mined out areas are highlighted here by the black 3D solids in the model. This presentation is brought to you by American Pacific Mining Corporation.
I like to show that video just so people can, when you see it, you get a better feel for it when you see it underground. Here's some of the drilling from 2017 that helped bring in Rio Tinto when they drilled into the latite porphyry. I'm going to show you a photo of the core of that in a moment. One of the things that's interesting about this deposit is it carries grades in all different types of rock. So you've got jasperoid, you've got native copper, and you've got massive sulfide that have all seen past production, but all carry really good grades. Massive sulfide typically doesn't carry great gold grades. We pulled a 69.4 gram per ton over 1.5 meters out of drilling this year that Rio Tinto did. So just kind of gives you an idea that the feeling is, because this skarn is taking such good grades near surface, that there is a system below that's pushing upwards that's creating those great grades. Here's a picture of the core, the porphyry that was drilled in 2017. Again, this is what helped to bring in Rio Tinto. You can see some of the chaotic folding in there and the brecciation, showing that there's a big system down below. And here's a look at what the oxidized skarn looks like, as well as the jasperoid, and gives you an idea of what that core looks like. And this carries great grade for us as well. So that's a bit about Madison. Just very briefly on that, Rio Tinto is going into their 3rd drill program. We're going to have significant news coming out on Madison. We will have an additional 5 drill holes that are in the lab that is coming out. We're going to announce their 2021 drill program coming up here shortly. We're going to put out an updated 3D model, which we're very excited to release, along with a full sampling program that we hadn't previously released as well. So significant amount of news coming up on Madison in short order. That takes me to Gooseberry, the Silver Gold Project. And as this is a silver-based presentation, I'll mention that I certainly understand the power of silver. I was lucky enough to work on Fortuna Silver from when it was a shell. It was a $10 million company then. It is a $2 billion company now, and their team has done an excellent job of driving shareholder value. So this is an asset that was last in production in 1991, last touched in 1994. We have it under joint venture with a private company called GRAC Global that are in the process of going public. They can earn up to 80% of this asset by spending $4.5 million in exploration, completing a feasibility study, making cash payments to us, along with 2 million shares of their company. Again, this is a high-grade gold silver asset. We actually staked this asset. It cost us $20,000 to get this. When you stake an asset, you don't get all the data. So we had to track down all the previous production data. We were able to find it at the University of Nevada, Reno. We got 12 old bankers boxes, dusty bankers boxes. We were able to get the original stope maps that kind of gave us an idea as to what was there. We're the first people to put a 3D model together on this. But to give you an idea of grades, production grades that have come out of this, you can see the map on the left. It's 0.91 meters of 65 grams per ton gold and 4,500 gram per ton silver. And then the map to the right, 0.9 meters, 113 grams per ton gold and 3,700 grams per ton silver, and on and on. If you go to our website, here's a picture of what some of the samples look like. If you go to our website, you can see the geological model there. You can take 2 minutes to run through that. And here's a historic long section as well. So the exploration targets are in the light pink. They referred to as reserves, which we won't refer to as reserves at this time. They mined out areas in the dark pink, and then Asamara mining is in the white. You can see below that they stopped while they were still in ore. This goes down about 1,200 feet. That shaft that you see, we compare this to Comstock Lode, which is about 20 kilometers away from us. That is they're in water issues as they speak, but they're down 2,900 meters, and they were in 20 ounce per ton gold. And then this is Tuscarora. We love this asset. It's just outside of Elko, Nevada, about 40 minutes from where Eric lives. This is the asset that we started the company on. Saldera has this under joint venture right now. A similar style deal to the deal on Gooseberry. They can earn up to 80% of the asset by making cash payments. We have 2 million shares of their company. They have to take under $4.5 million of exploration, and in this case, complete a pre-feasibility. Again, high grade. This is a gold-focused asset, but here are 2 of the veins that have been drilled to give you an idea of some of the grades that this carries. The 2 veins that you see within the inner white box are 2 of the well-known veins. The other veins that you see above were historically in production. And then as you get onto our project, you get under gravel cover between 0 and 200 feet of gravels. and those veins run underneath that gravel cover. That's what we're going to chase this year. We are going to be the operator, and we're very excited to get drilling here. So 2021 and 2020 and then 2021 milestones. Completed the acquisition of the Madison Copper Project under partnership with Rio Tinto. Completed a private placement for $3 million. It was actually led by Casey Research, Doug Casey's group, their newsletter, which was very helpful, along with the help of Kennecott and Echelon. We released 14 drill holes by Rio Tinto. We uplisted to the OTCQB down in the US. Rio Tinto started their drill program in July. They've announced 3 of those holes. There are 5 more pending. And then we've secured partners for Tuscarora and for Gooseberry. So what's going to be happening in 2021? Rio Tinto is going to start a significant drill program. We're going to release an updated 3D model from that to from the previous years of drilling. We're going to have drilling both on Gooseberry beginning of Q2, Tuscarora in Q1, and we're actively looking to do M&A to add additional assets into the company. You know a bit about me, and I've talked a little bit about Eric. Norman is our CFO. He's been doing this for around 40 years. Ken Cunningham is a name you may know. He was the former CEO of Miranda Gold, did a fantastic job with them. And then Jonas Lang, who works for Maple Gold Mines. I've known Jonas for a while. He worked at Riverside Resources, which is a company that I helped found, and has recently been at Maple, helped them bring in the Agnico Eagle transaction just recently. With that, thank you very much. I appreciate your time. This is our investor relations contact, Christina. If you have any questions for her, or if you have any questions for me, I'm certainly happy to answer them. So I appreciate you taking the time.
Thank you very much.
Thank you very much.
That was a great presentation.
That's a great presentation.
Okay, so we're going to go ahead and start taking some questions. Let me here start at the beginning for you. Can you maybe talk a little bit about the details of the warrants?
Yeah, for American Pacific. So there's $6.1 million worth of warrants that are between 20 and 25 cents. The vast bulk of those are at 20. I think there's 4 million shares left at 25, as some of those have already come down. Obviously, that puts $6.1 million into the company. So that's something that we're going to be looking to do this year, is to create some excitement to work on getting those warrants down. They expire, I believe, it is November of this year. Well, Sophie, I can't hear you. I've got you on mute.
Sorry about that. And here's an interesting question. So someone mentioned that your grades are mind-boggling, and that it's, phenomenal, all this for $12 million. So maybe you could provide some color on why the share price is where it is.
Yeah, I'm happy to do so. And actually, it gives me an opportunity to give sort of 2 answers there. Yeah, there's in terms of the grades, that's what really captured our attention initially. Eric and I actually toured this in 2016. Another company bought it, drilled, got into the porphyry, brought in Rio Tinto as a partner, and then decided they wanted to get into medical mushrooms. So that's why we were able to buy it. We bought the Madison asset. We paid $2.4 million in stock, which was 20 million shares at the time. Those 20 million shares came free trading the end of December. That's what's brought the share price down. Okay. So it's a fantastic time to be talking to new people, to be showing off the assets. $12 million market cap, $10 million of drilling this year or thereabouts. We're certainly going to get out and look to create a lot of excitement. It does have spectacular grade. All 3 assets, truthfully, have great grades, but we're going to see the largest program for sure on Madison. And those types of grades can certainly capture the attention of the investing market. I will mention as well, we are well covered on the newsletter side. So Doug Casey's group, Brian Lundeen, Matt Battiali, on and on, Chen Lenz, and another a great supporter. So we get a lot of coverage. So when we do have good news, it does get distributed fairly widely. We have a great PR firm that works with us as well. That's had me featured in Kitco. They brought me on as an industry expert in Bloomberg, clearly because they couldn't find anybody else. But they make sure that when we put out news that it's reaching the investing public.
Phenomenal. So then maybe you could discuss who are your institutional investors or major shareholders, and is Rio Tinto a major shareholder?
Rio Tinto isn't a major shareholder yet. We'd certainly love them to be at some point, and those are discussions that we're going to have going forward. We've been mostly retail owned. We've raised all of the money ourselves. That's always been my background is fundraising and more on the corporate side. We'd like to become more institutionally owned, and that's part of what we're going to do this year. We've been working quite closely with Echelon, who helped us with the last financing, and will help us with any future financings as we need them. Although we're not in a position where we need capital at the moment, simply because all of the exploration is being funded by our partners.
Okay, and I have a question here. Oh, no, sorry, that's the wrong question. Sorry about that. Are all the sites fully permitted, and do you own them?
Yes, 100%. We own all 3 projects. All projects are permitted. Rio has put in for a permit, drill permits, updated drill permits this year. And they're going to do a further plan of operation as well coming up for future years. So yes, also Madison has a small mining permit as well that's still in place. So if not that Rio Tinto, I think, would choose to engage in small mining, they're looking for something big, that's for sure. But that's in place as well. Just kind of gives you an idea of the level of permitting that's already been done. And then both Gooseberry and Tuscarora have drill permits in place.
So touching on Madison, is copper the target for Rio?
You ask a great question.
If you can't say, I understand, or if you know.
No, look, Rio Tinto is looking for a large mine that can make a 20+ year mine life. That's ultimately what they're looking for. If you look at the case of Butte, it was pretty dominantly. Look, it produced 21 billion pounds of copper, 715 million ounces of silver, 3 million ounces of gold, et cetera, et cetera. So that's the target they're looking for. Is it copper dominant? Yes. Although if you can find something that's got 3 million ounces of gold, 715 million ounces of silver in it, that all works. So that ultimately they're looking for something big. That's the point I'd certainly like to get across. The grades are splashy. That's what's going to create the excitement. But ultimately they're looking for something that can create a very long mine life and become a big mine. That's the ultimate goal for them.
So basically the goal for Madison is to actually become a large mine.
Yeah, 100%. I mean, look, you've got the skarnet surface, which they're finding a lot of interest in. When Rio initially got involved, Eric and I looked at each other and said, they're probably porphyry or bust. I don't know how much interest they'll have in the skarn. That hasn't been the case. They found a lot of interest in the skarn. And as they're drilling it, they're making it bigger. It keeps continuing off to the west. It keeps continuing down to depth. That's creating a lot of excitement for them. That's primarily copper gold. Now, as they get down into the porphyry, which is going to take more work, one would think that there's going to be additional elements added to that if they find it and as it gets bigger. But that is the ultimate prize.
Okay. And so that brings me to a question here. Which project could be made into production? All 3 or just the Madison?
Great question. All 3 have been in production previously. It's probably the best way to answer that. Obviously, Rio has done an awful lot of due diligence that if they believe that they can find it, that they can put it in production. I always say this to when I'm talking to small funds or family offices or retail investors. One of the great things to do when you're looking at these junior companies is find one that has a major involved because they've done the due diligence for you. And by that, what I mean is they spend an awful lot of time digging into the data, digging into the permitting, et cetera, in the understanding that they want to know that if they find what they hope they can find, that they can then put it in production. So Rio Tinto has done that work. So that's a leg up or an advantage for your fund, your family office, your retail investor, that they already know that. Gooseberry was last in production in 1991, hasn't been touched since 1994. I think we're going to have a lot of excitement with that asset. That's one that we're very excited to drill. Tuscarora was in production. Chevron and Horizon put an open pit there. So all 3 have been in production previously. We'd love to see all 3 get back there at some point. Let's see what this year and future years bring.
So how close is Rio to finishing their commitment?
They got a ways to go. They have spent $3.8 million so far in the first 2 years. They're going to do a significant program this year. I'm smiling because it's significant. We're going to put a press release out on that shortly. That's going to outline what their plan is. but it's really going to be leaps and bounds to move this project ahead. That would have likely happened last year, but with COVID, they could only have one drill on site at a time, one team on site at a time. COVID changed the world for all of us, no different than it did for Rio Tinto and for us. So significant program this year. We'll look forward to having that press release out here in short order.
So I have a question here from Ben. When do you expect results from the mentioned 5 remaining drill holes? Already released results for 3, he believes.
Yeah, that's correct. We put 3 drill holes out. There's 5 more pending. Those ones have been in the lab since mid-December. They should be out anytime. We haven't seen them as of yet. As investors have probably heard from a lot of companies, drill labs in the US are taking forever. It's been a problem throughout the industry. So it has taken some time, but we will have those out here, I would think, in the course of the next couple of weeks. Over the next few weeks, we'll have the drill results from those 5 holes, or a number of those 5 holes. We hope all 5. We'll be announcing the drill program from Rio Tinto. We'll be showing an updated 3D model. We're going to be showing some new targets that Rio has come up with that they're going to go after as well. So there's going to be a significant amount of news on Madison. We're also going to announce the drill program at Tuscarora, along with the start of drilling and the drill program at Gooseberry, which is going to start beginning of Q2.
Okay. So here's a good question. By giving up a big percentage on the JVs, what happens when they're completed for you guys?
Yeah, great question. So let me focus on Madison on that one, and then I'll touch on the other ones as well. The best example that we look at is Reservoir Minerals. So Reservoir Minerals did a deal with Nevson. Nevson could earn up to 70%. They did. They ended up taking out Reservoir Minerals for $360 million US, which is a long way from $12 million Canadian in the market cap right now. Similar style deposit that started as an epithermal system at surfacing, and then they got down into a porphyry. So that's where we're looking for our success, is for something along those lines. And then with the other 2 assets, it's going to be a similar story. We're going to, if they earn in, they can earn up to 80% of those projects, but they're a long ways from doing that. There's a lot of news flow that's coming out before that. And in both cases, they either have to do a pre-feasibility or feasibility, which shows you that it's going to production. That gives us the opportunity to have groups that put these assets into production in the future, and for us to reap the reward by retaining a percentage without having to spend our own money along the way.
Okay, excellent. So here's an interesting question. What's the link to Butte, I guess, Butte? It used to be listed entity in London, or is it just a comparison?
No, so the Butte mine is about 48 kilometers away from it. It's the same package of rocks. There's a lot of similarities from the way that we look at this geologically to the way that Butte looks. So we're hopeful that with drilling, that as Rio gets down into the porphyry, that we can prove up something similar to that. And that's the ultimate goal for Rio, is to find something that is that style and that size of deposit.
Okay. And then I think hold on a second. Paul had a question or 2 for you and for Peter as well. Paul, do you want to go ahead?
Sure. Warwick, I mean, you're giving up big percentages on your joint ventures. So, I mean, Madison, for example, if Rio Tinto did commit to 80%, what happens then? I mean, you only own 20%. Do they run the show, or like they're in charge, or how does that work?
Okay, so Rio can earn up to 70%, not 80. The other 2 assets they can earn up to 80, but Rio's got to spend $30 million US to earn up to 70%. In the case of the Madison project, they are the operator. So they're the operator as of today. We sit on an exploration council with them. So we basically get to see in advance what their game plan is going to be, and we get to contribute to those ideas. Rio Tinto are the experts on this. They're the ones that that understand porphyry is probably better than anybody else in the world. So from that standpoint, it works very well for us. You've got, I mean, the level and quality of work that's come out of these guys that we get to see is fantastic. It's, to us, the best way to drive a significant asset like Madison forward and retain what could be a massive percentage. 30% of something that ends up looking like a Butte, or even if it just remains to be a skarnet surface, but it's of good size, that can be worth a lot of money for American Pacific shareholders. So we like this model. Again, I'll point to Reservoir Minerals. That was a big takeout by the partner, and that's certainly something that we'd love to see down the road.
Would you spin out any of your projects?
Not today.
Okay.
Yeah, for where we are today, I think it's great, to be able to sit here today and say, look, we've got a $12 million market cap. It was a $45 million market cap before, but with those shares coming free trading, it's come back, c'est la vie. Now is the intention to get back out and get it there and get it higher. But to be able to sit here today and say it's a $12, $13 million market cap and there's going to be somewhere around $10 million of drilling today from 3 different assets, it's compelling.
I get the question for Peter. Can you touch on silver production compared to the holdings by the ETFs, which you touched on? I mean, it doesn't correlate. So what does that, in your estimate, give to the future of silver?
Sure. So I'm just going to go and take a quick glance at numbers to get that in line. So mine production last year estimated is about 800 million ounces of silver, and ETF holdings is closer to, well, in fact, over 1 billion ounces. And like I was saying before, the Silver Institute expects that will grow almost 20% over last year. The ETF holdings, sorry, not the ETF holdings, but silver investment. In any case, we're at a point where ETF holdings, just ETFs in silver, are 25% over what annual mine production is. It's just incredible numbers. I mean, it's hard to kind of understand. And like I was saying before, my view is that if you just look in a logical, practical sense, bullion dealers are sold out. They've been sold out for weeks. Premiums have been sky high for not just weeks, but I'm going to go months, perhaps more than a year at this point. So this has to rationalize itself at some point, and I think that essentially spot prices will just have to rise to come closer to what it costs to buy and own physical silver.
Do the Hunt brothers have any family that's alive, like sons, or might want to do something with silver? That's a scenario for a short squeeze, obviously.
Yeah.
So I guess that's my point I'm trying to make, that silver should be higher or should trend higher due to that fact. Thanks, Peter. Appreciate it very much.
Pleasure.
And Warwick, I think I have one last question for you. What about infrastructure on site? Do you have much infrastructure? And I mean, are you a miner or a explorer?
Look, we're an exploration company. That's where we are today. Infrastructure on site, yeah, there's a significant amount of infrastructure on site because it was a past producing mine up to 2012. Keep in mind, we're the partner with the second largest mining company in the world, who certainly is a miner. If there's a production decision to be made, it'll be theirs. And they're certainly the best group in the world to put it into production in the case of Madison. In the case of the other two groups, great infrastructure there as well. Both Gooseberry and Tuscarora are right off respective highways, and both have power right to the site. In the case of Gooseberry, it's actually quite close to the Tesla Gigafactory. It's about a 15-minute drive from there, right off that USA Parkway, which they're calling that the new tech highway. Google's on there, etc. Okay. So new power, new water, new sewage, all running up there as well. But yeah, and the question is likely mostly for Madison. Yeah, we're an exploration company. That is the truth. That is where our focus is. That is where our core competency is. But we're working with the second largest mining company in the world, and certainly they're the ones who will make the ultimate production decision.
You may be a royalty company eventually.
Perhaps, yeah.
Warwick, thank you so much for today, and Peter as well. Much appreciated. If anybody has any further questions, please submit them to us or to Warwick, and we'll make sure that they're taken care of. And don't forget, we have another event tomorrow, so join us again. Peter's going to be back with us tomorrow, so we're looking forward to that. And again, thanks to everyone for attending. Thanks for the questions. We appreciate it. Everyone, be careful, be safe, and we'll talk soon.
Thank you so much.
Thank you.
Thanks,
Thank you.